You've tried budgeting, I know you have. You downloaded an app with a name like Mint Budget Pocket Guard Plus that promised to transform your relationship with money. You color-coded a spreadsheet at 11 p.m. on a Sunday, full of hope and caffeine. You categorized 3 days of transactions. Then you bought gas station sushi at 2 a.m. and the whole system collapsed because there's no category for poor life decisions. Today, we're fixing budgeting. Not by trying harder, by admitting the system is broken. Welcome back to Capital and Capybaras. We've covered compound interest, emergency funds, and where your paycheck vanishes before you see it. Now it's time for everyone's favorite guilt spiral, budgeting. Here's the thing. Traditional budgeting was designed by people who genuinely enjoy tracking the price of bananas. The rest of us need something different. Today I'm giving you 3 approaches that work for actual humans with actual impulse control problems. Pick 1. You don't need a $47 course from a guy whose entire personality is a spreadsheet. Let's talk about why you've failed at budgeting. And before you spiral, most people fail. Studies show around 80% of budgets are abandoned within 90 days. That's a worse retention rate than New Year's gym memberships. That's not a you problem, that's a system problem. Traditional budgeting asks you to predict the future, track every penny, and feel crushing guilt when reality laughs at your predictions. It's a recipe for financial self-loathing, brought to you by the same industry that profits from your shame. The classic approach says, list every expense, assign a dollar limit, and track religiously. But life isn't a spreadsheet. Your car doesn't break down in convenient, budget-friendly increments. Your friend doesn't check your entertainment category before setting their wedding date. And that Amazon order you don't remember placing, the one that arrived in 7 different boxes? Good luck categorizing that at 3 a.m. when you were apparently shopping for a humidifier, a yoga mat, and something called a desk plant that is now dead. The other problem, tracking everything is exhausting. Every coffee, every parking meter, every time you grab snacks because the meeting ran long, and you're going to commit a crime if you don't eat something. It turns your financial life into unpaid data entry. And the budgeting apps? They make money from ads and premium subscriptions. Their business model depends on you feeling bad enough to keep opening the app. They're not on your team. When it gets tedious, you stop. Then you feel like a failure. Then you abandon the whole concept and call it intuitive spending, which is a fancy way of saying money leaves my account and I choose not to investigate. Enter the 50-30-20 rule. This isn't my invention. It comes from Senator Elizabeth Warren's book, back when she was a bankruptcy professor. The idea is simple. Instead of tracking every purchase, you track 3 buckets. That's it. 3. 50% goes to needs. Rent, utilities, groceries, insurance, minimum debt payments, transportation to work, the non-negotiables, the stuff that keeps you housed, fed, and not in collections. If you're spending more than 50% here, you have 2 options: increase income or decrease your needs. That usually means roommates, a smaller apartment, or moving somewhere that isn't trying to charge you coastal prices for landlocked mediocrity. I know, nobody wants to hear that. But math doesn't negotiate. 30% goes to wants. Restaurants, streaming services, hobbies, that thing you saw on TikTok, vacations, concert tickets. This is your guilt-free spending money. I need you to hear this part. Guilt-free. The entire financial wellness industry runs on making you feel bad about spending money on things you enjoy. Ignore them. If it fits in your 30%, you're allowed to have a life. You don't need permission from a podcast host who made their money telling you not to spend money. 20% goes to financial goals. Emergency fund, extra debt payments, retirement savings, investments. This is future you money. We talked about paying yourself first in episode 2. This is where that happens. If you're still building your emergency fund, this entire 20% goes there until it's full. The beauty of this system? You only need to check 3 numbers. Did needs stay under 50? Did you save 20? Then the 30 in the middle can be spent on whatever you want without tracking every transaction. The categories within each bucket don't matter, just the buckets. Still too much structure? Let me introduce the anti-budget. This one's for people who see a spreadsheet and feel their soul leaving their body. The anti-budget has exactly one rule. Pay yourself first, then spend whatever's left. That's the whole system. No categories, no tracking, no color coding. Dave Ramsey would be furious, which honestly is a selling point. Here's how it works. Your paycheck hits. Immediately, before you touch anything, a predetermined amount automatically transfers to savings and investments. Emergency fund, 401k, brokerage account, whatever your goals are. This happens on payday, not at the end of the month when whatever's left inevitably equals zero. Then, you spend whatever's left on anything. No categories, no tracking, no opening an app to see a red number and a passive-aggressive notification. If the money's in your checking account, it's yours to spend. If you hit zero before payday, congratulations. You've discovered your natural spending limit. Eat some rice, contemplate your choices, and do better next month. It's accountability through consequences, not through an algorithm designed to make you feel bad. The key is automating the savings part. You can't forget to pay yourself if the bank does it for you. You can't accidentally spend your investment money if it never touches your checking account. Remove the decision from the equation entirely. Willpower is finite. Automation is forever. Okay, some of you are type A personalities who looked at those last two methods and felt your eye twitch. You want control. You want data. You have strong feelings about pivot tables. I see you. For you, there's zero-based budgeting. This is the detailed approach, but done in a way that isn't completely unhinged. Zero-based means every dollar gets assigned a job before the month starts. Income minus expenses equals exactly zero. Not because you spent everything, but because every dollar, including savings, is accounted for. It's like giving every dollar a name tag and an assignment. The key difference from traditional budgeting: you assign money forward, not track it backward. At the start of the month, you decide, here's what I'll spend on groceries. Here's what goes to transportation. Here's what I'm saving. When the grocery money runs out, you're done buying groceries until next month, or you move money from another category. Apps like YNAB You Need a Budget are built around this method. It has a learning curve and a subscription fee, because of course it does. But some people genuinely love the control. These are the same people who enjoy filing taxes and organizing their spice rack alphabetically. If that's you, no judgment, this is your method. If that sentence made you want to take a nap, the anti-budget is waiting for you with open arms and zero spreadsheets. So which method should you use? Whichever one you'll actually stick with. I'm serious. The finance internet will argue endlessly about which system is best. They're wrong. The best budget is the one you actually follow. A perfect zero-based budget abandoned in February is worthless. A sloppy anti-budget maintained for 5 years will quietly change your life while everyone else is still debating envelope systems. Here's my recommendation. If you're just starting out, or you've tried budgeting before and it ended in tears, start with the anti-budget. Automate your savings, even if it's just $50, and stop thinking about it. Once that becomes invisible, try checking your 50-30-20 balance once a month. If you find yourself wanting more detail, then and only then consider zero-based budgeting. But honestly, most people never need to go past step 2. Despite what the personal finance content machine wants you to believe, you don't need an elaborate system. You need a simple system you actually use. And here's the secret nobody selling courses wants you to know. You can combine methods. Automate savings like the anti-budget says. Do a 5-minute 50-30-20 check once a month. Ignore zero-based budgeting entirely, unless you genuinely enjoy it. That's it. That's the whole system. It doesn't need a name. It doesn't need a branded template. It just needs to work. Whatever method you choose, here's how to actually make it stick. First, start embarrassingly small. Automate $25 to savings. That's it. I know some guru is screaming that's not enough, but that guru has a book to sell you. The habit matters more than the amount. $25 you actually save beats $500 you planned to save and didn't. Second, schedule a monthly money date. 15 minutes once a month, same day every month. Check your bank balances. Make sure automation is running. Glance at spending. That's it. Make it pleasant. Pour a drink. Put on music. Sit somewhere you actually like. If your financial check-in feels like a punishment, you'll avoid it like a dentist appointment. And we both know how often you go to the dentist. Third, build in fun money from day one. This is non-negotiable. Every aggressive savings plan that eliminates all joy eventually fails in a spectacular revenge spending incident. I've seen people go from, "I'm eating rice and beans for 6 months," to, "I just bought a boat," with no steps in between. The 30% in 50-30-20 exists for a reason. Sustainable beats extreme every time. Fourth, forgive yourself immediately when you mess up, because you will mess up. Everyone does. You'll overspend 1 month. You'll forget your money date. An emergency will bulldoze your whole system. That's not failure. That's called being a human with a life. The only actual failure is using one bad month as an excuse to abandon the whole thing. Reset and keep going. The personal finance subreddits will survive without your confession post. Let's recap. Traditional budgeting fails because it was designed by people who don't have your life. The 50-30-20 rule simplifies everything into 3 buckets: needs, wants, and financial goals. The anti-budget is even simpler. Automate your savings, spend the rest, stop thinking about it. Zero-based budgeting is for the spreadsheet enthusiasts. Bless their organized hearts. Pick the method you'll actually follow. Consistency beats perfection. And remember, automate everything. Check in monthly and budget for fun, or you'll end up buying a boat. If this gave you permission to stop feeling guilty about not tracking every latte, hit subscribe. Next episode, we're diving into credit scores, the mysterious 3-digit number that determines whether you get approved or get the "we regret to inform you" email. Spoiler, it's a game. It has rules, and the rules are dumber than you think. Drop a comment. Which budgeting method are you actually going to try? And if you've already found something that works, share it. The comments section is more useful than most budgeting apps. Stay chill, automate your savings, and stop buying courses.